I think 75 is the new fair value. So let's say in the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. So we go from 75 to 150.
The world of cryptocurrencies is known for its rapid price movements and notable profit potential. As the 2024 Bitcoin BTC halving event approaches, experts are making bold predictions about the prices of several cryptocurrencies. While we wait for Bitcoin to halve, 2024 is shaping up to be a year where Bitcoin will reach all-time highs. In light of these advances in Bitcoin value and market sentiment, altcoins are quickly catching up. On the U.S. market front, despite the recent comment that Powell is not ready to cut rates, Bitcoin's fourth halving and slowing miner exits will fuel the Bitcoin rally. The good mood surrounding Bitcoin spot ETF approvals is causing the price of Bitcoin to rise. The uptrend continues the streak of 5 monthly bullish candles and is ready to challenge the overhead resistance of $50,000. Additionally, the halving year has always been a bullish year in Bitcoin history. In today's video, we will tell you about Mark Yusko's view on Bitcoin as he thinks that Bitcoin will go huge in 2024. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Leverage is what actually determines the number of parabolic breakouts. Whatever that number is, when you're below fair value, normal investors buy because that's what investors do. They accumulate assets below their fair value. They don't like to buy above fair value, but they will. And then a speculator is actually the complete opposite of a hedger. It's actually a technical term. So if you are an oil producer, you must sell your production forward on the futures market. Then you are a hedger. It takes a speculator to step in and take the long side of this sale. The same goes for a Bitcoin miner. You must cover your production. You need a speculator to come and buy, so it's neither good nor bad. But this speculator is providing capital, net new capital that stimulates demand. The halving cycle, the doubling of fair value, depends on the halving of block rewards. Therefore, miners would be in trouble if the price does not move. We now have ordinals and transaction fees, so let's assume the impact is 50%, meaning we'll have 50% less upside from reduced block rewards because miners can make up ground through transaction fees. So let's say we go to 75 instead of 100. Actually, that's where we're going to go. We will keep it at 75 due to the transaction. 75 is therefore the new fair value. We will now move to the halving at 50. Then we will show the halving from 50 to 75. Now, traders and speculators, we believe that in this cycle, there is less leverage. They're cracking down on finance and cracking down on Voyager and Celsius, so there's just less leverage. Let's say this time, we simply double the fair value. That seems fair. So we went from 75 to 150. Now that 150 has some volatility, you can't predict a point. So if there's more speculation, we get a little over 150. If there's less speculation, we get a little less. But it seems to be somewhere in that 150 range. It's not guaranteed, but it seems very logical for the climax of this cycle. Many smart people are predicting between 100,000 and 120,000, 104,000. Tommy Mustache and Tim Peterson are at 104,000. Someone else is at 120. The Bitcoin network is the most powerful computer network the world has ever known. It is 1,400 times more powerful than the CERN supercomputer. It is also the most important computer network in world history because it establishes the new base layer of money. Gold has been the basis of money for 5,000 years. Bitcoin will be the base layer of money for the next 5,000 or 10,000 people or whatever. The price therefore has no importance. The price is a liar. Price has nothing to do with value. Price is what two people exchange for a small amount of a good or service. It's the price, just like Microsoft's stock price. It is what it is. If you have 100 shares, if you have 1 million shares, that's not the price. If you own 10 million shares, that's not the price. You have to go negotiate with someone to buy your block. So the price doesn't matter. What matters is owning part of the most valuable computer network in human history. This seems like a good thing to have. Now, you don't have to own all of your net worth, but everyone should own some. Never owning the most valuable computer network in human history seems like a bad deal. So own some. Buy it today. Buy it tomorrow. Buy it next week. Buy it next month. Don't buy everything at once. Let's say you want 1%, 2%, 5%, or 10%. It does not matter. Choose a number. Buy a 10th today, a 10th next month, a 10th. Keep accumulating. This property is really important. Now, if you also want to have some of the trading capital, if you want to buy the dishes and sell the top, do that. Just make sure to buy more at the bottom if you want to exchange. But as for property, the share that should be in everyone's portfolio, whatever the percentage, keep buying it and accumulating it, whatever the price, and forget about it. Every 2 weeks, most people who have a retirement account, a 401k, buy stocks every 2 weeks. They don't even know about it. They don't even think about it. It's just happening. So do the same with this. Bitcoin is a better long-term asset because it not only provides you with a way to grow your wealth, but it also provides a hedge against the destruction of the currency we all live and work with. Since 1913, the United States of America has decided that it is going to steal 2% of my wealth every year, sometimes more, sometimes less, but on average 2% every year thanks to inflation. There is no planet where this is a good thing. And if you think about any country with inflation above 2%, tell people like Argentina at 118% last month that somehow it's good for them. Or tell the Turkish people who have just lost 99% of their purchasing power that one way or another, the depreciation of the lira is good for them. Or telling Venezuelans that the bolivar has no value, since one of your main assets does not necessarily have to be the only one, but rather as one of your main assets, it must accumulate over time. Especially young people. What people forget is that, for whatever reason, they think that they should have a diversified portfolio when they're young. But no, they shouldn't. They should have a very concentrated portfolio when they are young because they already hold a large portion of fixed income securities, which represent their future income. So, what they should have in the short term is private equity, venture capital, real estate, stock, and whatever high volatility assets they can own when they are young. And Bitcoin is undoubtedly one of them. Bitcoin is part of a diversified stock portfolio. This is the most important addition because it is not correlated to your other actions, as all your other actions are driven by economic growth, interest rates, and inflation. Bitcoin is not governed by any of this. It is driven by money supply, technology, and adoption. The halving event aims to maintain Bitcoin scarcity by gradually decreasing the speed at which new Bitcoins are released into circulation. Ultimately, this process will result in the mining of a total of 21 million Bitcoins, and no additional Bitcoins will be generated after the final halving event. The general consensus is that Bitcoin halving events are positive for the Bitcoin price, and they have been historically. The event often sparks optimism among cryptocurrency investors, subsequently leading to positive price developments. This positive price development can be attributed to several factors. First, the decrease in the supply issuance rate highlights the scarcity of Bitcoin, which can increase demand and therefore increase its price. Additionally, the halving event brings attention to the crypto space, attracting new investors and contributing to increased trading activity. However, it is important to note that although halvings have historically led to price increases, the magnitude of these increases may decrease with each subsequent halving. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.